So welcome back, Sam again here from privatefxclub.com. I wish to talk about what a lot is in Forex trading. Forex exchange pairs, when they're bought or sold, are usually traded in a unit called a lot. So a lot is the unit amount that the market uses to trade currencies. And for all intents and purposes, in a dollar pair, we could say that a lot is equivalent to $100,000. This is also known as a standard lot. Let's just recap. A lot is the unit amount that the market uses to trade currencies, and it's 100,000 base units. In a standard lot, if we're trading a standard lot, in other words, if we are controlling $100,000 worth of currency in a trade, each one of those pips that we talked about in the previous video, each one of those price interest points, or the difference between a quote of 180.40 and 180.41, is going to be worth $10 to your account. When we talk of mini lots, we're talking about between 0.1 and 0.9 lots being traded, and that will give us $1 to $9 per pip. I hope that makes sense. And now when we talk about micro lot trading or micro trading, Forex micro trading, we talk about trading in micro lots, which refers to 0.01 to 0.09 lots being traded. And that it will give a value of 0.1 to $0.9 per pip move. So if the market moves currency pair up a pip, then, and we're trading with a micro lot 0.01, that's going to be worth 10 cents. And we can do the maths on that we can do the math on that very quick. We can say what's 100,000 times 0.0001, and it comes out as $10. And similarly, if we're trading fractions of lots, if we're trading mini or micro lots, we're trading a fraction of a lot. And I've given you the dollar values per pip there as well. So in other words, it's just to recap again, the standard lot is equivalent to 10 of these mini lots or 100 of these micro lots. Normally, one standard lot will cost approximately between 600 and 1200 of the money that a trader has with their broker. So we'll talk about how that works, because you don't need $100,000 in your account to control that $100,000, and that is part of the magic of the Forex margin broker. Although it's not magic at all, but it can seem like magic, but we're going to explain it through in the next slide here. So what is this leverage thing? Well, think about it. When a commodity moves less than 1 cent a day, like we had in a previous video, with the dollar moving 70 pips, and that's worth about 0.7 cents, which is less than a cent a day, is pretty worthless for you or me as an individual trader. And it's pretty worthless also to the banks who are making their profits from these trading activities or losses. And that is why your Forex broker will offer you a leverage of 100 to 1, 200 to 1, 50 to 1, even 400 to 1. And what that means is that your account with your broker needs only have, for example, $500 to $1,000, and that will allow you to make worthwhile gains potentially on your account, because your broker will allow you to go into the market controlling $50,000 to $100,000. That might sound like it's crazy at first, but in fact, what the broker is doing is accepting your $500 as a deposit, and because the market's going to move at $10 a pip, for example, that $500 covers you for 50 pips of move if the trade were to go against you. In other words, it's a margin deposit. Let's just see if the next slide expands on that. Yes, the margin broker may accept as little as $100 to start an account and offer up to 400 to 1 leverage. So in this example here, I've said starting a mini account to trade mini lots with $1,000 and 100 to 1 leverage, and you want to buy 5 mini lots or 0.5 lots. In other words, you want to control 50,000 units of currency, then your deposit with your broker, who's offering you 100 to 1 leverage of $1,000, 500 of that $1,000 that you've got with your broker is required as a deposit for the trade. In other words, the broker will take that $500 and hold it as security on your trade, and as the price then moves, your equity moves up or down by $5 a pip. Now that doesn't mean that you're necessarily going to throw away your entire $500 in a trade. It means that that $500 is allowing you to control $50,000 worth of currency on the market, and it's taken as a deposit by your margin broker to allow you to trade that vast amount compared, we're talking relative to your account size. We'll talk about this slide in the next video. I want to thank you and just mention my website again, privatefxclub.com, privatefxclub.com, where you can find plenty of free Forex training and information and how to kickstart your Forex trading business. Thank you.